I'd like to welcome you to the Rap and Dough platform.
Thank
And
you.
I appreciate you and your time. But one thing I was saying before you got on is that one thing is that a lot of us new entrepreneurs, if we haven't learned it already, we're going to learn today that it's not 100% about how much money you make, but also how much money you can keep.
Right, right, right.
And that's where you come in at,
That's
right?
where I come
So
in.
yeah, we need tax professionals to not only help us hold on to some more of our money, but just find some extra loopholes that, I mean, if we haven't understood the fact that business ownership and the tax codes and whatnot are geared towards the entrepreneur yet by what we've seen, how much Trump pays in taxes, I don't know what else we need to see, because it's like, wait a minute, he made how much? He paid how much in taxes?
Right, right,
So
right.
yeah,
But
having a
see,
good tax professional is
so that's
dope.
one thing that I was going to say is that people don't realize that Trump has advisors. You know, he has probably multiple CPAs on staff. He has tax
Multiple.
planning. He has, tax strategy meetings. He's not just out there, you know, making money and saying, okay, I'm making
Willy-nilly.
money and going on. Right, right. He's actually, paying attention to what's being done and he's being advised. So that's an important thing, is that people need to realize that you need trusted advisors, that are working with you, an attorney, a CPA, a financial advisor. You don't want to just make the money. You want to be able to make sure that you're keeping more of the money, right? And that you're paying
That
less than
part.
tax. Right. That part.
That whole part.
That part.
So
So you're
that may be a hurdle though for the new entrepreneur, because here it is, they say, okay, I want to start this business, I want to make this money, but us, we don't like to invest in the things that we need a lot of times. So we'll make the money, but how much you want to do my taxes, or how much is that lawyer? I'll pay up when I catch up.
right,
So
right. But
how do you feel about that new entrepreneur, and what guidance could you give them on that mindset?
it's an investment. So you have to invest money in order to make money, right? So you have to invest money in order to keep money. So it's an investment in your business. It's an investment in what it is that you have going on in order to get that information so that you can keep more of what it is that you're making. Whether it's, I know you do a lot in stocks and options and things like that. So it's like a lot of people started trading options and you make $100,000, but all of that is not your money, because it's going to go, some of it is going to go to the government in capital gains tax, whether it's short term or long term. So if you don't know that, you're just going to be out there doing whatever. And then you have this big tax bill at the end of the year and you're surprised, right? So that's
Mm,
why, as an entrepreneur and whatever avenue that you're doing business, whatever avenue that you're looking to generate additional revenue, you need to research and get the information to know how to structure your business, how to run your business, how to just plan for taxes. And people don't do that, especially now. It's like we're in November, you can ask someone, so how much money did you make? How much money did you make in capital gains, for the year? What's that tax going to look like, right? And they were like, oh, I don't know. you know,
right.
but Uncle Sam is going to know. Uncle Sam is
This
going
is
to
the
know.
this is where a lot of us are at though, Marjorie, because we know all the fires, like we have access to all this information.
Mm-hmm.
But a lot of things, I was listening to the Tweet Talk podcast, and it was talking about how there's slaves that actually didn't want to leave with Harriet Tubman.
Mm-hmm.
So there's information that's out here that we know, I'm gonna say we know that we need to be doing,
Right.
but we choose not to. And I know it's frustrating sometimes on my end teaching, and I know it has to be frustrating dealing with the new entrepreneur. I'm pretty sure you have an influx of us in your office at this point, and I know you come across all these different types of scenarios where it goes like, didn't I say do X, Y, Z, and you didn't do X, Y, Z yet?
Right. That part. That part.
Okay.
This episode is sponsored by the Breadwinner Society. See, during the pandemic of 2020, a lot of us became entrepreneurs and stock market investors. But one thing I noticed is that a lot of us out here trying to do it on our own and be on an island. And that can be super frustrating. So what I did was I decided to create a community of like minds that can come together and discuss business ideas, investing ideas, trading ideas, pretty much more than your money's worth. So somewhere in the description, there's a link. Go ahead and click that link and come build a society.
Set up your business.
How does the new entrepreneur, go about even vetting or selecting someone like yourself?
You have to have someone that you can trust. So, of course, you want them to be educated and knowledgeable of the tax code. So you have to look at, especially with social media. So it's like you can kind of look at a person's background. You can look at their environment. You can look at how they carry themselves compared to before. You couldn't, right? You would just find a tax preparer, in the newspaper, right? So now you can at least look at someone's background. You can look at the information that they're putting out, right? So you want to look at that type of information, see what kind of education they have, see what kind of advice they're giving to their clients, because everything is on social media. Are they telling you to tax plan? Are they telling you to look at tax strategies? Or are they just telling you to prepare your taxes? Because there are some people that just prepare taxes, right? They just wait to the end of the year, they get your information, they prepare the tax to tell you what you owe. So you have to look at what it is that you need, and then make sure that you have a relationship with that person. So like with me, you can schedule a consultation, we'll talk for 15 minutes and get to know you, you get to know me, you see how I work, and then you determine if you want to work with that person or do you want to work with me. So you have to interview them, same way you would interview someone for anything else. You're not going to just go and pay the first lawyer that you find if you need one. You're going to, do some research in order to find out what background they have. What do they specialize in? Because all CPAs or all tax professionals don't specialize in the same thing. So if you're a real estate investor, but you're talking to someone that deals with someone that just does coaching, real estate investors have different, tax nuances. So the coaching tax preparer or CPA may not know that information. And a lot of CPAs are niching down. So they're specializing in just one area. So that would make a difference too. It's like if you're just doing real estate investing, then maybe just talk to CPA or tax professional that only does real estate investing. If you're just doing options, and just talk to someone that does just options. But you want to have someone that has knowledge in the area that you're dealing with. And get to know them. Excellent. Right. Just get to know them, and they get to know you, and realize that you want to build that relationship, because as a CPA, I ask a lot of questions. I ask a lot of questions naturally, but I ask a lot of questions. But when it comes to, working on a tax return, it's like I ask questions because I need to get the information. And it's challenging when you're trying to help someone and you're having to pull teeth. So you want to make sure that you have that relationship, so that you realize that, hey, I have to be open with my CPA. I have to tell them what they need to know in order for them to help me.
Like talking to your lawyer, like, why are you going to lie to your lawyer? Why are you holding out on your lawyer?
Right.
He's trying to help you. If he doesn't know everything, he can't help you.
Right.
That makes sense.
Right. And then with the IRS, it's like the information is going to come out. So if you don't tell me, if you made $100,000 in stock and you tell me you didn't, at the end of the year, you're going to get a 1099. If you don't report that 1099, the IRS is going to send you a letter, so why go through that process? Just, provide all the information up front.
Right. That makes sense. Okay. So, all right. So with that, when you're interviewing these CPAs, is there usually like free consultations, or people usually have to pay for those consultations?
It depends.
Because if they're vetting, if they're trying to see who's a fit, that may deter somebody too. Like, I got to pay everybody $300 just to see if I want to work with them.
Right. So there's a difference. You can have a conversation with the CPA to get to know them, like a consultation, just like a new client consultation. So I do that with my clients. It's like, if someone is interested in work with me, we can sit down, we can talk for 15 minutes. That consultation is different than someone calling me and wanting to ask me a specific question or picking my brain. You know what I mean? It's like, you should have to pay for my knowledge and my time. If you're going to come on as a client, then it's like, yeah, I'll give you 15 minutes, because I know that we're going to generate this relationship and we're going to be doing business. But if you just want to, book a consultation and ask a question, then yeah, you need to pay for that. Which I think is rightly so, right?
Yeah, absolutely. I just made a post matter of fact, before I got on this call, like, I'm showing what I'm doing with my mother's portfolio. And I'm like, look, you want a consultation? Hit the link in the bio.
Right.
Hey,
right.
Listen, this information, I mean, yeah, that's a whole nother conversation about, how people say, or there's some taboo about people selling their information, but that's a whole nother topic. Wait a minute, but my thing is this. Don't teachers get paid for their information?
They do. Mm-hmm. They may not get paid as much, but they do get paid.
But they get paid for their information, right? It's like, no one frowns upon that.
Right.
And I don't even really think they get paid enough, but no one frowns upon teachers that get paid for their information. So why is it such taboo? It's rhetorical. Why is it such taboo that when Black people do it, when we want to teach what we know, oh, they scamming, or like, what are you talking about, dude?
Right.
Anyway,
but
tangent.
And it's a difference between just general teaching and asking someone a specific question about their situation. So someone came to you and said, hey, I want to invest my portfolio this way, or I want to do this, or I'm thinking about this, something that's specific to them. It's like, I think that you should pay for that. Just like me, if someone comes to me, it's like, hey, I want to talk about, how to structure my business, what I should be expecting for tax time, when I'm looking at numbers and your information, and I'm actually providing a service for you in a sense, then I think that should be paid.
Absolutely. Freaking absolutely. So, what was my next question? I'm not sure if I asked this already, but what are some easy and simple ways that people can, I guess, be prepared to start vetting? Like, let's say they're starting to get their ducks in a row and they want to be organized. What are some easy things that the beginning entrepreneur can do now to be more organized when they come to you? Did I ask that already?
No, you did not. You asked about vetting. So let's talk about that one. So first of all, you have to have all of your information together. So that goes back to if you're a business, your organization documents. If you're an LLC, so you're going to have your articles of organization, your EIN, your business bank account, have all of that information together, right? And have it set up correctly. I've had people that would start like a partnership. They're like, okay, let's go in 4 or 5 people and buy a property, right? And so people just start sending money, but then you don't have any of the partners' information in order to prepare a tax return. So make sure that you have all that. Make sure if you're doing something like that, that you're forming an entity and you're getting everyone's name, address, social security number. You have operating agreements for the whole entity. So everything is lined out, because all of that makes a difference when you're preparing the tax return. And then from a business standpoint, so once you have the organization documents, then making sure that you have your business bank account set up and that you're using your business bank account for all of your business transactions. So everything is going into your business bank account, that you're not using your business bank account for personal expenses, that you're keeping everything separate, and that you're tracking it. So what you've made, how much income you generated, what your expenses were, for the month, year to date, so that you can address that as far as did I make too much where I need to where I need to do some tax planning, or am I okay? So just gathering the information, and you can do that. You can do it in a spreadsheet, but it's easier to do it in accounting software. There's Wave that's free. There's Xero that I've not used, and there's QuickBooks that I like. But you can just set up your QuickBooks and start tracking and categorizing your expenses. Even if you don't categorize them, if you have all of them in the software, it's easier for someone to go in and fix it for you than it is to have to start from scratch with bank statements. Because keep in mind that, the bank only maintains the information on their system for so long. So when you don't have it in your system, then you have to go back to, importing information from bank statements, or it's just more time consuming and it's more costly. So that's another thing, is like, if you're doing things as you go along, it makes it easier for your tax preparation to cost less, right? If your preparer has to go back and pull out all this information, and it takes a lot of time, and, they're having to generate reports for you and create financial statements, then it's going to cost you a lot more in tax prep fees. And more than likely a lot more in tax, because had they been able to have that information ahead of time, you could have done some tax planning.
Hacks on hacks on hacks.
This episode is sponsored by the Breadwinner Society. See, during the pandemic of 2020, a lot of us became entrepreneurs and stock market investors. But one thing I noticed is that a lot of us are out here trying to do it on our own and be on an island. And that can be super frustrating. So what I did was I decided to create a community of like minds that can come together and discuss business ideas, investing ideas, trading ideas. Pretty much more than your money's worth. So somewhere in the description, there's a link. Go ahead and click that link and come build a society.
So basically, you recommend some bookkeeping software. I think I've seen one. I'm not sure if it's QuickBooks, that you can attach your account to. So every time money is spent, it automatically goes into QuickBooks, and then I guess you can categorize it as you see fit.
So QuickBooks will allow you to do that. Wave will allow you to do that, and I'm sure Xero will. Xero is a new platform. I actually have not used it yet, but I'm getting ready to start an account with them just to kind of try it out, become familiar with it. But all of them will allow you to do that. And so when you have all the information in a system and it's linked to your bank account, it's easy to go in and categorize things and know what it is that you're making. Even if you just categorize the income, you know how much income that you've made.
Yeah, I did that. Yeah, and it populated. I was like, oh, okay. So yeah, that is okay. So having something like that not only saves taxes, but it saves on the tax preparation.
Right.
It saves on your fees of getting your taxes done.
Right.
So
right. And it helps you to know where you are. It helps you to know, like, if you need to make some changes to save money on taxes. It helps you to know if there are some strategies that you can implement or that you should be implementing in order to save money on taxes. So that's the thing. It's like, it starts with the foundation. It's like, how can you save money on taxes if you don't even know what your tax liability is going to be, or if you don't even know how much money you've made, right? So you have to track it.
So I'm pretty sure you got hella hacks, because I've been following you, and you got all the hacks. So we gonna plug you. So how? Okay, so you're on the West Coast, right?
Yes.
How are taxes done nowadays? Because I'm pretty sure you have clients that are not where you reside. So how is that done nowadays? Like, is it virtually? Like, people just faxing stuff back and forth, Zoom calls? Is that what we doing now?
So even before COVID, people were faxing information or mailing information or emailing information in order to get it to the person that prepared their tax return. Since COVID, you see more like virtually. So with me, I set up a Zoom conference with my clients as for the intake. So we'll set up a meeting via Zoom. We'll talk about what's going on. And I have a link to my portal where you can upload your documents. So you can upload your documents there. I can send you documents there. You can sign electronically, pay electronically.
Is that Asana? Is that the Asana thing you was talking about?
So Asana does something different. Asana kind of tells me what projects are going on, but my other software it's another portal that I have. Where everything, you can send emails through there, you can send messages. It comes with an app, so people can take a picture of their documents and upload it directly without having to scan it. Wow. So everything is being made easier. You can do anything, and it doesn't have to be, because I am a CPA, I can prepare taxes in any state, with the exception of Hawaii. You have to live in Hawaii, but I can prepare taxes in any state. And a lot of times people question, can you prepare it in another state because you don't live there? The big thing is the federal tax law. That's where everything happens. It's all based on the IRS. And then the states just either conform or not conform to what the IRS is doing. So it's just a matter of knowing how each state conforms. And a lot of times they do the same thing.
Okay, because I have an LLC out of, where's this LLC out of? How long ago I used it? Oh my gosh.
Wow.
Yeah, wow. Yeah, that's a whole nother conversation. But I got this LLC because they said the tax benefits for this type of LLC works better in that state. So you would be able to go in and handle that even though you're not in that state.
Mm-hmm. Mm-hmm.
Okay.
Mm-hmm.
Because I was talking this. Go ahead. I don't want to.
There are some companies that have offices in multiple states, or they do business in multiple states, and so then you'll have a return. So you'll do the federal return, but then you may have income in like Texas, and then income in Oklahoma, income in Arkansas, or something like that. So you may have to do some apportionment, or figuring out how each state receives their portion of the tax. So yeah. Most of the times where you live is where you are taxed as an entity. Like in California, a lot of people want to file a Nevada entity, but they live in California. So be aware of that, because like a California LLC, if you live in California, California is still going to want their money. Right. And then also their portion of the tax. And then also, if you're a single member LLC, you're a disregarded entity. So you're still going to pay. It's still going to come through on your individual return. So it's not like, you're just completely avoiding it on the state side.
Yeah, I have a question on that coming up. So, okay. I've been getting, I guess, conflicting opinions on this one in regards to the address you put on your LLC.
Mm-hmm.
So most of us new entrepreneurs they have home-based businesses.
Mm-hmm.
So from my understanding, I'm piecing it all together. That's why I got you here today. That with a home address on your LLC, that is frowned upon versus a different address on your LLC, maybe a virtual or a brick and mortar address. So which one, I guess, I don't know, how should I frame this question? What address is better to put on your LLC for the business owners of today? like us new entrepreneurs?
Which address do you want the public to see? It's public information. If I was to go and look up a California LLC right now, it'll tell me their address. If it's your home address, I'm going to know what your home address is. But
who knows if that's a home address?
But most people can Google anything, right? So you can Google and see if it's a home address. I think it's better to have it as a virtual address. So then that way it keeps it separate as well. And it's easy to get a virtual address. I mean, you can go and get a post office box. You can go into one of these workspaces, like shared workspaces, and just pay for a virtual office. And it's just basically an address. But it keeps the business and personal separate. It's not that you can't do it, but yeah.
One of the things that I heard about someone that has a home address on their LLC is that banks tend to frown upon that in regards to giving you a loan. Is that true, or does this happen on some cases? It's not all cases.
I can't speak to business credit. That's not my specialty.
Okay.
So yeah.
Okay, that's there. Okay, I'm gonna save that for another guest then. I ain't know if you had knowledge of that or not. I had to throw it in there just in case. All right, but you do say that it is better to have a virtual address than physical address.
I think it's better. It just keeps it separate, and it keeps it separate, and then also because it is public knowledge, So even like, I serve on some nonprofit boards and I don't put my home address because they ask you for the address of the directors. It's like, I don't put my address on there. I always put the address of the organization, just because it's public knowledge, It's like, you don't want people knowing where you live. Regardless if they know or they don't know, it's still public knowledge.
Yeah, makes sense. So, what would be the proper way to pay for things? Because I have a home-based business, so I call myself, okay, you know what? I'm gonna put my Wi-Fi, my business name. I'm gonna put this in the business name. And when I talked to an accountant, he told me that I shouldn't have done that.
Right.
I shouldn't have put my Wi-Fi bill under my business. I shouldn't have I think I put my cell phone bill under my business. And I'm like, why? He was like, because you're not using it for 100% business. Like, I am though, but I'm kind of not. I watch TV sometimes. But it's like, you're not using it for 100% business. So you shouldn't have done that. And you agree.
I agree. Especially the Wi-Fi.
Like, yeah,
especially the Wi-Fi, because it's not 100% business, and it's more of a personal expense than it is a business expense. So you can do business use of the home if you use like a specific area of your home for business, and then you can take a portion of the utilities, so the Wi-Fi, the rent, the mortgage interest, property tax, things like that, as a business deduction. But I wouldn't put it in the name of the business, because it's not 100% business. The cell phone, if you use that cell phone for 100% business, then okay, fine. Use that one for business, and then you have another one for personal. But if you're using it for both, then just keep it personal, and then, deduct a percentage of it. So you can always deduct a percentage of it, just like if you're using your personal vehicle for business, you can track your mileage and your expenses, and then you get to deduct a portion of that, the business portion, on your tax return.
This episode is sponsored by the Breadwinner Society. See, during the pandemic of 2020, a lot of us became entrepreneurs and stock market investors. But one thing I noticed is that a lot of us are out here trying to do it on our own and be on an island. And that can be super frustrating. So what I did was I decided to create a community of like minds that can come together and discuss business ideas, investing ideas, trading ideas. Pretty much more than your money's worth. Somewhere in the description, there's a link. Go ahead and click that link and come build a society.
There's a lot of different business entities. And the first thing we run to is an LLC.
Mm-hmm.
Is that good practice? Because there's not, I believe it's like 9 different entities.
There's like 4 to 5.
4 to 5?
I like basic.
Yeah.
So it's like an LLC, a partnership, a sole proprietorship, a corporation. And then you can have different varieties of that. Like you can have an S corporation, You can have a multiple member LLC. So yeah. I think
so
the reason why people go to an LLC is because it's easy to form. But you have to think about the fact that as a single member LLC, it's a disregarded entity. So the income is going to be reported on your individual tax return. So as you're growing your business, that may be good in the beginning, but you may not want to stay as an LLC. You may want to elect to be taxed as a different entity, whether it's an S corporation or a corporation, or a partnership. But they form the LLC because it's easy. And then keep in mind too that there are a lot of other factors that go into which entity that you should go into. Rental property is good in an LLC. If you intend to pay yourself, you can't pay yourself in an LLC. So you wouldn't want to go into that, that type of entity. So
real estate,
rental property is recommended in an LLC.
Okay.
Mm-hmm.
Okay. So you can't pay yourself with an LLC.
You can't pay yourself a salary. You can pay yourself, but you can't pay yourself a salary and have like the payroll taxes withheld and, contribute to a 401k. You can't do that with the single member LLC because it's a disregarded entity, just like a sole proprietorship.
So that's good to start off with, but as you grow, you may want to elevate.
Right.
Basically.
Right. And that's why it's important to keep track of your numbers and to have a good CPA that you're working with that's watching those things for you. So that's what businesses do. You go in business to generate an income. You have people that work with you in order to, give you financial reports on a monthly basis, let you know how much money you're making, let you know what your expenses are. They're evaluating ways to cut. They're evaluating ways to generate profit. They're looking at your tax situation. That's what businesses do. So as entrepreneurs, we need to run our business like a business.
So in order to have I made a reference as to disclosing information to your lawyer or to your CPA like you would do your lawyer. You can be on retainer like a lawyer as well, right? So
I wouldn't call it like a retainer. It would be more like you're performing either quarterly services or monthly services, or there could be like a package that you select where we're working together for the whole year. So like we're having that relationship as you go throughout the year, and then we prepare the tax return. So you always have that connection. So I guess you could call it like a retainer. So yeah.
Okay. Mm-hmm. Okay. So they can book you out for a year or whatever y'all negotiate.
Mm-hmm. Mm-hmm.
Cool.
Mm-hmm.
So I had a question. I believe this is one of my last questions before we wrap up. I had a question from a friend of mine. So I said, yeah, I'm interviewing a CPA. You have any questions you ever wanted to ask one? So he said, his question was, can you have 2 businesses under one LLC and commingle funds? For example, he used the Marriott example for when he said back in the 80s, they used restaurant and rest stop money to carry their hotels until they were self-sufficient. Well, self-sustainable.
Mm-hmm.
Well, big businesses probably can get that off. I don't know if little people that ain't.
But if you're running a business and it goes together, you can have multiple businesses in one LLC. and you can have multiple bank accounts, right? So you don't have to just have one bank account for your LLC. So say for instance, back in the day, I worked on a hotel. So I'm trying to think. Actually, they did have two different entities. They had one for the hotel and they had one for the restaurant. But they were owned differently. But you could kind of do, if they're complementary, if they kind of go together, you could have them under one entity. And it's you saying commingle funds, it's more like it's the business. So the overall of the business is,
it's one fund anyway, so you're not commingling.
So you're not commingling.
It's one business.
Right.
Gotcha.
I don't take commingling like that. I think I take commingling like, you're using your personal funds for your business activities.
Right.
But as long as it's all business related and it's all in there, you can do it. You may want to have separate bank accounts, and you transfer between the bank accounts or something like that, but it's not really commingling funds as long as the ownership structure is the same. But say for instance, if you have like you go back to the Marriott, say for instance, they have the hotel and it has certain owners, and then they decide to build into it a restaurant that has different owners and they want to change the way that one's held. So say for instance, they want to do that one as a corporation instead of an LLC, then you wouldn't want to commingle those funds. You would want to maintain separate books for that one and separate books for the other one.
Okay, so I guess the first answered the second one. So if you have two similar kinds of businesses under one LLC, there is no commingling because it's the same business.
Right, it's the same business. You just do two different activities. Mm-hmm.
That's fire.
Mm-hmm.
I think the people got an earlobe today. But damn, I appreciate you, Miss Marjorie. And you know what I think when I think of you, Miss Marjorie? I think can I be honest? When I think of Miss Marjorie, I think of this, like if you was to go in the dictionary and look up nice lady, I think it'd be a picture of you standing there with your picture. For real, that's the energy I get from you. You're just such a nice lady. I appreciate your time today.
Wow, thank you.
You're very welcome.
Thank you.
I made you blush.
I don't know if everybody will agree with that one, but hey.
Yeah, that's the energy I get. So we're gonna keep it like that.
We'll keep it like that.
I very much appreciate your energy, and hopefully I can have you back. And when I come up with some more CPA questions.
Mm-hmm. I'd be happy to. My goal is to not just as a CPA, but in life is I love to see people succeed. So if there's anything that I can do to help someone, I'm going to do it. Whether it's me personally or referring them to someone else, it's like I just love to see people succeed. So I may push people too much; they don't like it, but hey, it's all for the best.
Hey, you know what, man? That's crazy because I feel the same way. We're so passionate about what we're trying to get you to do and understand that it comes across like that, but we don't mean no harm. It's all for your benefit. We promise. We promise.
All in love.
All in love, man. Yeah. I really appreciate you though. Let me see. So I think I'm gonna end on that. I think you just gave us some strong words, and I think we're gonna end on that one. So
awesome.
Hopefully I'll see you very, very soon.
All right. Take care.